Hello, this is Evan here from the Trade Risk on Wednesday, April 28th, 2021. We are intraday right now, and this is our weekly swing trade ideas video where we bring you stocks based on a variety of discretionary, technical, and quantitative criteria, all of which we're going to break down for you in just a moment. As always, these videos are sponsored by our partners over at Investors Business Daily. We curate all of our long ideas from their stock lists. You can get access to their stock lists with a link in the description of this video. So we've got six names in total that we're looking at in today's video. We're going to kick things off with Amazon, which comes from my sort of discretionary curation bucket. Now, full disclosure here, I do have a position in Amazon. I have a long position in Amazon. It's not really in my trading account. It's in my sort of long-term position. You could think of it more of a position trade or even an investment if we want to go that long term. It's something that I'm not really actively going to be trading in and out of whatsoever. It's something I'm looking to hold on to for 6 months plus ideally, and I've had it for a little bit of time. So when we look here at Amazon, what we can first notice is just the length of the consolidation that has taken place. So we're actually looking at a weekly time frame right now. And so if we look at Amazon here going all the way back to really August, September of 2020, this has gone absolutely nowhere. It's been trading between, call it 2,900 and 3,500. It's been about a 600 point range in this stock. And if we look at where it is right now, you can see it's just kind of poking its head up and looking to potentially make a new weekly closing all-time high. Now, of course, the elephant in the room here is that Amazon reports earnings tomorrow. So we have a catalyst on deck here. We have a potential market moving day tomorrow for Amazon. Seems likely that this is going to be the catalyst to either, get it out of this range or to fade it back in and kind of hammer it back into this sideways range that it's been in. So that's the catalyst. The technical setup is perfect. If there were no sort of earnings on deck here, this would be kind of the slam dunk breakout potential trade here from a longer term base in a leading long-term stock. But because of the earnings catalyst, there's a little bit of uncertainty there. So I wanted to highlight it. I wanted to bring it up. Again, full disclosure, I do own it. I'm not trading it aggressively or anything like that. I'm not looking to sell it tomorrow. But it is certainly a stock that looks interesting to me from a discretionary sort of standpoint. Now, let's move into some of the old technical stock scans. We have all of these stock scans on our store. We have a Warden TC2000 store filled with stock scans that you can basically look at all of these that we're going to look at today. This comes from our pullback strength scan. This is on a weekly time frame as well. That's how I found it. So take a look at this. This is ticker symbol AOSL. I'm looking at a weekly time frame right now, but let's sort of appreciate the trend and everything that's kind of going on here. And let's see if my screen locked up. Nope, I think I'm good. Okay, so we've got this nice long-term trend that has been in place for the past 12 months. And most recently, you can see the stock topped out around $42. That was back in February of this year. And then take a look at just the orderly sort of pullback that has taken place. We've got a little bit of high volume creeping in here on the sell-off, so maybe not perfect, but certainly from a price structure perspective, it's been sort of consolidating nicely here and fairly orderly. Last week we had this big sort of big tail on the bottom here, so a nice kind of pin bar, maybe if we want to call it that, and we're trying to sort of lift up now. And I like the fact that we're getting back into this range. We kind of undercut the lower end of the range last week, and we're starting to lift up. So AOSL looks like a nice sort of, if we want to paint it as a bull flag here on a weekly chart, you've got this channel. You could label it as a daily channel that's sort of declining a little bit. And if we can start to get maybe a little more energy out of this stock on the upside to break this series of lower highs, then maybe this is the trigger you need to get involved in this name. I have no position in it at this current time. So AOSL, this is looking pretty nice here from a longer term sort of maybe weekly picture. And right now, no trigger yet, but it's something to just keep on the old watch list. Number 2, we're going to go to Caterpillar, ticker symbol CAT. Now, this one does have earnings also coming up, but this one hit our ultimate consolidation scan, which is basically looking for very tight consolidations, orderly consolidations, sideways ranges. It's called our ultimate consolidation scan. CAT was on it today. And again, if we look here just at this very tight range that has been carved out, particularly over this past 30 days, 20 trading sessions, that is a very, very tight range here of trading. So this here looks pretty set to kind of explode with volatility one way or the other, right? We don't know, we don't predict here which direction when we get into these breakout or when we get into these consolidations. We can never really know ahead of time. We do have clues, right? We can look at momentum, we can look at prior trends, we can see where it's trading. I think ideally for me, Caterpillar would be the ideal long sort of breakout setup as it trades potentially to new all-time highs, but we'll have to see if that actually happens over 237. That's basically the catalyst, or that's the price target objective that we would need to take out on some volume to get this breakout moving. Reports earnings tomorrow, so keep that on your watch list, something to pay attention to. Moving on to our third technical trade idea, ticker symbol SANM. So this one here is a name I am not familiar with. It's smaller cap company, although, and using that target term loosely, it's a $2.7 billion company, so it's not that small cap, but maybe for nowadays 2021 timeframe, it is a small company. So when we look here at SANM, we have our Bollinger Band squeeze scan is what's picking this one up. So take a look at Bollinger Bands on here. So I have just the standard kind of 2 and 20 on the daily. Look at the pinch that's coming together here on this stock. It has been coiling up and getting very tight here. Lots of overlapping bars, very similar to Caterpillar that we just looked at, only we're using sort of Bollinger Bands to find the contraction pattern. So same rules apply. We don't know which way this is going to break out, but we know that compression leads to expansion, leads to volatility, leads to breakouts. And so it's something we can pay attention to. Of course, I think ideally, once again, the ideal breakout direction is to the upside because it would be in the direction of the longer term trend, but we'll have to see what we get. SANM, Bollinger Band squeeze scan, that's our third idea from our technical stock scans. Now, if we move on to FCX, let's go back to our standard chart here. Freeport McMoran, this one has been a very strong stock now for some time. It's been trending. It's been moving up very aggressively. It's up about 60% on the year, and it's been sort of fading a little bit or having some trouble around this 38.50 area. It originally got back up here around February. It failed, kind of got back up there around March. It failed, got back up in April, it failed, and now it is trying again around this level. So you have basically this range right in here, right? This little band of resistance that is giving the stock some trouble. And you can see today it's trying to close back above it. It's up 1% on the day. This is hitting our gap down recovery scan. So this is kind of an interesting setup. And this is what's cool about this scan is notice the gap down that we saw today. So we had this inverted hammer yesterday. We basically saw a bearish follow through today. We opened the day weak here for FCX, but notice bulls came to the rescue. We traded down just briefly, and now they are rallying this stock strongly, and it's setting to close at new 52-week highs here. So FCX looks like it wants to put this resistance area behind it. Let's see how it closes the day. You could see how it closes the week, but looking for a breakout here, looking for a hold above, call it $38, I think is the key here for FCX. So keep that on your watch list. This is the weekly picture for this particular stock as well. Nice orderly uptrend. Saw some volatility over the past few months. Now it's trying to get going again. This is our gap down recovery scan if you're looking for it on our website. Last but not least, I'm going to leave you with one quantitative trade setup. This is from our Lamerick trading system. ticker symbol LMT, Lockheed Martin. So this is a stock that we actually purchased yesterday, but it hasn't really moved a whole lot. So we are currently long this stock. We are long, full disclosure, long LMT. We are looking for this to go higher. This is a short-term swing trading system. So we could be out of this frankly as early as tomorrow. It could be a very short hold for us, so do keep that in mind. But we are basically looking for some mean reversion here. We're looking for this to pop up. We're looking for a little bit of a rally here in LMT. We're not going to be involved in this long one way or the other, but we do have a position here. 371.50, I believe, was the exact fill that we had on the stock. So we are long at 371.50. Plan to be in it for a few days, looking for a little bit of a rally, 1, 2, 3, 4%. That's it. Lock in the quick gain and sort of move on. That's what this system looks for. You can learn more about that on our website as well. That's our Lamerick trading system. So that's it. That's what I got for today's video. 6 different ideas for you. Of course, it's a very busy week of earnings, so make sure you double check all the earnings dates. Make sure you check your own holdings, because companies can certainly move in lockstep with one another if we get a serious sort of catalyst in a particular sector or industry in the market. So do keep that in mind. And as always, I thank you for tuning in. Every Wednesday, trade ideas just like this. Do subscribe to our YouTube channel to stay up to date with all the latest, or you can follow us on the Trade Risk blog and catch all the videos there. Thanks so much for watching. We'll see you back here on Friday for our market analysis video.